What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Happy Friday. Hope you're doing well. Hope you had a great week. Getting ready for the weekend. We're going to go through a few current events in Bitcoin. A little bit slower of a news day, but we're going to watch a couple videos, talk about a couple charts, talk about what's going on with the Bitcoin price. And then at the end, we're going to hit on some macro. So thank you for joining me, guys. Let's hit it off with, of course, the webpage, the homepage, if I can find it here. Why isn't it coming up? There we go. Bitcoinandmarkets.com. Sign up for the free email list and get my blog posts and the weekly newsletter that comes out every Monday. You can also support the show there. There's a few perks. You can check out the different tiers. I am live streaming on YouTube, Rumble, Twitter, and Telegram. So if you're watching on Twitter, where most of the concurrent views happen, or the live views, then you can jump over to YouTube and Rumble. Like, comment, subscribe for me. I appreciate that. Trying to get the YouTube monetized. And it's also easier to go back and forth with the live chat on YouTube or Rumble. YouTube is still the best with their live chat. But, okay. So this is the homepage, but what are we going to jump into? Let's go to the chart first, talk about Bitcoin. It has crossed 100K since I last live streamed, but back under it again, this mu. So what does that mean? Well, Bitcoin in bull markets likes to do this mu shape where it comes down, crashes down, and it comes right back up. And that's exactly what we've seen here. I tweeted about that this morning when it was about here because Adam Back tweeted the mu. He tweeted the Dalai Lama mu. And so I retweeted him and also added my own chart to that. But these arrows were from the Telegram pre-show. So, Bitcoin is going really strong. I did predict that Bitcoin would get over 100K by the end of the year. That has happened. I think Bitcoin might not stay over 100K right now, but it's not going to be dipping down to 80,000 again. It's up here at this level for the long term. Let me bring in this pattern. I've been talking about this pattern since back here at the top. And this is October of 2023. And the reason why I did this pattern was because it had a certain characteristic that I thought was going to be repeated this time. And that is specifically, we have all of this demand, all of these bids. They're going to buy up any pullback. They're going to buy up any dip. Any dip is not going to get a chance to get going because MicroStrategy is buying, because Marathon's buying, because Riot's buying, because Tether's buying, because Metaplanet's buying, ETF is buying, and people that are market makers for the ETF options are buying. Perhaps governments are even in that we don't know about yet. And so there's so much bid under this market that is not going to have a big pullback. It's going to consolidate in this type of upward channel. So that's why I originally put this on here. But since then, it has been miraculously close. If you look at this hump on the last live stream, we did scoot this over a little bit because I originally had it about 24 to 48 hours pushed over to the right on this chart. But I scooted it back because it matched this hump and this spike. So the dip and the rip right here, it matched. It even matched this downward dip on the other side of it to the candle. So we matched here on the way up. We matched all along. The gravity of 100K pulled the price up. We liquidated a lot of supply came onto the market at that 100K mark, initial test, pushed the price back down right into the pattern. And the pattern has been sticking great. Now in the pregame show, I talked a little bit with Telegram, like what we could see here. I don't think that we're going to go all the way out to the end of like the last week of December before we really break higher. I think this pattern will be cut short in a move higher. But I will write about that on my next premium post over on bitcoinandmarkets.com. Okay, let's go into some of these tweets. So this is my chart that I've been tracking. I published it several times back on Bitcoin Magazine Pro, and I published it on my content on bitcoinandmarkets.com. But this is cumulative Bitcoin ETF flows. And what I pointed out here, and what I have been pointing out, is back since this initial 74,000 high, so that was back in March, we had this long consolidation in price. Price was consolidating pretty much in a downward channel, but cumulative ETF flows were rising during that time. Okay. Now, cumulative ETF flows are about 3 times higher than they were back here. They're getting close to 35 billion. And back here is 12 billion. So it's getting close to 3x the cumulative flows. But price is only 33% higher than 74,000. So price has a long way to go to balance this supply and demand up here. 100K was just a pit stop. Okay, so that's the first tweet I wanted to share. Second tweet here is from McKenna, Crypto McKenna. They say here that this was the largest amount of liquidation since the FTX insolvency. All right. So you can see these lines down here. FTX had a huge liquidation spike. Now we had a huge liquidation spike. And look how bullish this is. That marks the bottom. These liquidation, I guess it would be longs, liquidating these longs. That when we have this type of event, that's very bullish. That usually puts in a bottom. And so putting in a bottom when we're all the way up here at 100K, guys, how bullish is that? It's extremely exciting that this could just continue ripping right away. I mean, not much more need for consolidation because look at this liquidations that we had. So the consolidation usually happens because, we have to have some distribution. People will take profits. New people will buy. Okay. And those new people will want to hold and they'll have a target up higher. So there is this distribution. But if we have these liquidations, that like hyper speeds the distribution of coins. And so now that distribution is done. We got it over with. We don't need to wait 3 weeks. And so now we can go higher again, right? We have new owners, new holders of these coins that probably have much higher targets. So there you go. That's my explanation of that. Next tweet is going to be this one. And before we get into this, let me check comments. See if there's any comments here on this Friday. Based sovereign. What's going on? Mu. Yeah, it is the Mu. So that's going back way to previous Bitcoin bull markets. I would say even before 2020. I don't know if anybody's used that for many, many years. But when I saw Adam Back use it, I was like, oh yeah, the Mu. The Mu is back. So that's fun. All right, let me check Telegram, see if there's any comments there. Boog made it. Glad you're here, buddy. All right. Let's continue with this lady. She is from Charles Schwab. I'm not sure of her name, but she's pretty good. I watched this, and I mean, she kind of looks a little bit like a Bitcoiner, I don't know. She's not all stuffy, like in perfectly office, just a pretty face that's talking on the TV or something. No, she looks like she knows what she's doing. And she had some really great comments here. So we're going to listen to this. She's from Charles Schwab, talking about 500K to $1 million Bitcoin and government adoption and how much you should have in your portfolio. She's saying 10%. What? Okay, let's make sure this is turned up. And let's
where does it go? What's your price target for Bitcoin?
So I think in the short term, we're going to see one of two cases. The first case is we're going to have some sideways action between 110 and downwards to 80, and we'll see some chop. The second scenario, and that will come either in the short term or in the medium term, is once we have the Bitcoin Act, which is currently under consideration, passed, where the U.S. government will be buying Bitcoin into its reserves, as well as other countries and other corporates for their treasury assets as well, we could see a 500K Bitcoin or $1 million Bitcoin. The sky is really the limit here.
And
okay, actually, this is Schwab Network. Okay, so this is like their own in-house network. So that's why she's from Charles Schwab. But there she said that the Bitcoin Act is going to be what pushes the price up to the sky's the limit. Well, we have a lot of other things that are pushing it up too. And we don't necessarily need the Bitcoin Strategic Reserve from the United States. Dennis Porter, now how whatever you think of him, he's claiming that 10 more states are going to be introducing Bitcoin reserve bills at the state level. So on top of Pennsylvania soon. I don't know what the time frame is there, but the states could do it. Businesses could do it. Other sovereigns could do it. And the U.S. government doesn't necessarily have to do it, but I think it is right now. I would put those chances at about 50-50. I wonder what Polymarket has that. I've looked at that in the recent past, but let's see if I can find that real quick. I might have that tab open because I have about 40 different tabs here. And I'm going to refresh this page, see what we're doing. Okay, I'll share this tab. So we have Polymarket here. Chances are sitting at 29%, which they are rising slightly over the first week here of December, but not significantly. This back here was 48% back on November 21st. Yeah, but it's not diving. I would put it higher. I would say this 48% is about right. So this is probably a good deal if you're gonna want to bet on something here. This would be you're probably in the money on this one. But anyway, so let's go back to the lady and listen to her rest of her thing here. Okay, that was pretty good. I mean, obviously, not a very nuanced discussion of why price is going to go higher. She's just talking about supply and demand, but the fixed supply is very new to people. So boomers too. And so that is, I guess, if you were to teach someone Bitcoin, that would be something you would say in like the first 10 seconds. So maybe that's where people are. They're still at that very first, like, what is Bitcoin? Oh, it's fixed supply. So maybe that's where Charles Schwab customers are. Maybe that's the target market. I also noticed that she didn't have any notes. She kind of looks down. She looks down a couple times, but you can see she doesn't have any notes. Maybe there's a computer screen in the table that she's looking at. I don't know if she has notes on a hidden computer under the desk, but she's not looking really at notes. So I think this is good that she's able to speak like this about Bitcoin. Anyway, let's continue here. Okay, we have to go back. I like her, guys. I like her. She did a good job there. And this is going out to all the boomers there and Charles Schwab. So I thought she did a good job. The only thing I would push back, and this is nuanced for people that are deep down in the rabbit hole and are, I guess, fans of the show, or maybe you're new to the show, but you're deep down in the Bitcoin rabbit hole. I'm going to push back on this, and I'm going to say Bitcoin is not a currency, people. Bitcoin is money. Just like gold is money, Bitcoin is money. The dollar is currency on top of gold. The dollar is currency on top of Bitcoin. So Bitcoin can be used as currency. Okay, it's crypto money, not cryptocurrency. It's crypto money. And you can have currency on top of Bitcoin, which would be a derivative, a layer 2. Most likely a currency would be at least a federated layer 2. So a side chain that has a pegged unit, that is the currency. The pegged LBTC for liquid Bitcoin is the currency on the liquid network. Bitcoin is the money that's pegged. You could also have centralized layer 2, which would be just someone else's database. They hold it, maybe a bank or something. They hold it and they settle their transactions between the banks with their own databases, not a side chain, but their own databases. And that's not perfect, obviously. But guys, they're using Bitcoin, okay? As long as there is some transparency there, as long as there is the use of Bitcoin, it's going to put pressure on the system to be more honest. That's what we want. I mean, don't let the good be, what is it? Don't let perfect be the enemy of good. So there probably will be centralized layer 2s that use a Bitcoin currency because Bitcoin is the money. So anyway, that's the only thing I would add to what she said. But good job. Let's go over to this next one. And this next one is from David to Will. Never heard of him. I did pull up some information. Let's see if I find that tab. So he is from Pro Chain Capital. He's president of Pro Chain Capital. Provides his expectations on the market, retail earnings, and health and consumer oil, Saudi Arabia. So it looks like he's that's what he's doing here. President of Pro Chain Capital. And now let's go back and listen to what he has to say. Is this coming through? I'm showing no volume here coming through. Guys, give me a thumbs up if that sound is coming through. Oh, no sound on the Schwab video either. Shoot. Oh, man, I need to watch the comments better. Why wasn't that coming through? Let's see. Let me try playing that.
What? Where does it go? What's your price target for Bitcoin?
So I think in the short term, we're going to see one of two cases. The first case is we're going to have some
Are you guys hearing that now?
sideways action between
Sorry, I'm going to keep the chat open. I can hear her now. Hit the video again one more time.
110 and downwards to 80, and we'll see some chop. The second scenario, and that will come either in the short term or in the medium term, is once we have the Bitcoin Act, which is currently under consideration, passed, where the U.S. government will be buying Bitcoin into its reserves, as well as other countries and other corporates for their treasury assets as well, we could see a 500K Bitcoin or $1 million Bitcoin. The sky is really the limit here.
And why? What would drive it there?
So Bitcoin is inherently a scarce asset. You only have 21 million Bitcoins. And the Bitcoin Act, for example, proposes buying 200 1,000 Bitcoins a year, which would significantly drive up the price as there's a finite supply.
And what about use cases? I was talking about this with a guest on a previous show on Trading 360, just in terms of, President Trump, President-elect Trump has talked about, the one rule of Bitcoin is you don't sell your Bitcoin. Yeah. But do you expect more people to actually start using it in terms of an actual currency?
For sure. So I don't think that Bitcoin is inherently the type of currency that you buy a cup of coffee with. There are places where people do that. So, for example, El Salvador, which I've written about extensively, they use the Lightning Network for those types of smaller transactions. But you don't necessarily need it for that. That's not the prime use case. The prime use case of Bitcoin is a store of value. So when we think about money, there's usually three characteristics that people ascribe to money, the economists ascribe to money, and that is method of exchange, unit of account, and store of value. So there's thousands of methods of exchange around the world. Every currency around the world is a method of exchange. Unit of account, however, there's only a handful. There's the dollar, there's the euro, there's the yen, and now there's Bitcoin. But when you talk about store of value, none of those things are considered stores of value because of their inflationary properties. So if you're a high net worth individual living in the US, you're not storing your value in a case of cash. You're storing your value in buildings, in businesses, in sports teams, in gold, and now in Bitcoin. So Bitcoin is that similar type of property. It's just digital, which makes it that much easier to move, to sell, to trade, to transfer it across borders. So it's basically digital, it's property, but improved.
And how?
All right. So that's where I'm going to leave that one. Sorry, guys. Hopefully I can get the sound working for the next one. Let's see. What is going on here? Hold on. I'm going to stop sharing. Okay, there was something, I was double sharing or something like that. So let's go to this one now. Hopefully the audio will play. If you guys have joined since I went on my rant about that Charles Schwab video, go back 5 minutes. I was ranting about it, but there was a problem with the audio. So, all right, this should as well come through on the audio. I'll be watching the comments here to make sure it does.
That's a fairly bullish call, but you're probably right. At these levels, it would effectively be a doubling from where we are right now, a little bit more than that. And of course, we've had that and then some this year.
Yeah, I think that we've only begun to see the positive catalysts that are coming. I mean, clearly from Donald Trump's picks within his cabinet and supportive roles, there are really crypto mindful people that have been supportive, between Scott Bessent and Paul Atkins and now David Sachs, who will be the AI crypto czar. You have some really sharp, really successful, really pro-crypto people in and around the administration. On top of that, you've got a Congress that is controlled by Republicans that has already seen a bill that will establish a strategic reserve of Bitcoin for the U.S. government. Whether that gets passed or whether that goes forward, it doesn't matter. There are other countries around the world like Brazil, Poland, Russia, the state of Pennsylvania, who are also all considering strategic Bitcoin reserves, as are corporations around the country. And so this is a scarce asset, and I think that people, inclusive of the biggest investors around the world, sovereign wealth funds and nation states, will start to buy this and will have a difficult time keeping the price low, and therefore demand is going to totally outstrip supply.
Okay, that is just so bullish. I don't know how you guys could not be bullish after listening to that. But not everyone is bullish, okay? So let me go to this one. I do have one tweet on altcoins, but I'm going to leave that towards the end. So this one here is Larry Summers, former U.S. Treasury Secretary, and he is not very bullish on Bitcoin. He's not very bullish on the idea of a Bitcoin strategic reserve. So we will see what he says, and I hope I have all of this
special interest campaign contributors. But some of what is being said, this idea that we should have some kind of national Bitcoin reserve, is crazy. I understand why we need a national oil reserve. I understand why a century ago we accumulated gold in Fort Knox. But of all the prices to support, why would the government choose to support by accumulating a sterile inventory a bunch of Bitcoin? There's no reason to do that other than to pander to generous special interest campaign contributors.
Okay, well, first off about this is got you, Larry Summers, got you talking about Bitcoin, man. You're playing into our hands. Bitcoin is growing so much that you have to address it. In a big interview here on Bloomberg, you have to address Bitcoin. So, gotcha. But no, he does say he understands why they held gold. Okay, well, let's just start by explain that to me then. Why did we hold gold? We didn't hold gold to support the price. We wouldn't be holding Bitcoin to support the price. We held gold to support the value of the dollar, not to support the value of gold. Buddy, I know you know this, Mr. Summers, but anyway, so not everyone is bullish. He's deep into I don't know, because I would have said in the past, Larry Fink would have been agreeing with Larry Summers. It's Larry Fink, right? And Larry Summers. And like Jamie Dimon, right? They all are invested in the system, the current system. But then Fink has made me think twice about that. So yeah, Larry Summers is similar to Jamie Dimon. He's just so bought into the system. And then he has this, he has to admit to why we would need Bitcoin to back the dollar, right? And that could potentially be negative for the dollar in the meantime. So if he's like, oh yeah, it's a good way to back the dollar because the dollar is not backed by anything and it's crap and all this, of course, then that would tank the dollar if these big wigs started coming out and saying that. That's why Powell smartly said that it doesn't compete. Bitcoin doesn't compete against the dollar, and he's right. Bitcoin competes against money, and the dollar is currency, and so you can back the dollar by Bitcoin, right? So, like I said in a tweet, that gallons does not compete against gasoline. You measure gasoline in gallons, just like you would measure dollars or Bitcoin in dollars. So that's that. Sorry if you guys are on Telegram and you're hearing all my notifications. The family is texting here after work. But okay, we listened to that one. Let's read this one real quick. Okay, I gotta mute this. I'm just gonna close that down. Okay, Bloomberg here. This is Bill Dudley. He is a former president of the New York Fed. Oh my God. I'm sorry, guys. I had to turn off these notifications somehow. Mute notifications. Where is it at? There we go. Sorry. Okay, so here we are with Bill Dudley writing for Bloomberg today. The headline is, "A Bitcoin reserve would be a bad deal for Americans." Yet another example of these guys that are so vested in the system, they cannot find a way to look at this rationally. But let's read through it, because he does have some good takes or some good information for people, but then totally misses the mark. So Bitcoin has shot up more than 40% since Donald Trump's victory in the U.S. presidential election, in part on hopes that he'll champion a government reserve devoted entirely to the money, the crypto money. He supported the idea during his campaign, and crypto-friendly legislators have offered ways to make it happen. Check, check, 2 check boxes there. It's hard to fathom how this would benefit most Americans. And it's not. You're adding assets to the government's balance sheet, buddy. Why is that hard to understand? That's going up 40%. That's going up like 40% every 4 years on average. Or no, 40% every year is the 4-year CGAR. Okay, Bitcoin has some positive attributes. It's portable. You can keep millions of dollars worth on a thumb drive. It's semi-anonymous, and in the sense that holders are identified only by a alphanumeric key. It's also can be tied to your IP address and things like that. And you can study on-chain analysis to try to identify. But what's really great about being semi-anonymous is that we can have transparency in the government. We can follow what the government's doing. Like, look at what ARK is doing with tracing all the ETF flows and all this stuff. We can have transparency for the people on the institutions. That's why it's good to be semi-anonymous, because the individual can still have some anonymity, can still have some privacy, can do it, use the different tools to keep their privacy, but the big institutions can be made to be transparent, which is beautiful. It's almost, it's not an accident. Every time you come across something like that in Bitcoin, it was not an accident. It was thought of. And it's probably back on Bitcoin Talk, the original forum board for Bitcoin. They probably talked about that back there on Bitcoin Talk already. So it can be transferred to anyone, anywhere, without relying on government-regulated banks or other traditional financial intermediaries. And I would say without being stopped by, not just relying on, not without relying on, but without the potential of being stopped by corrupt governments, not government regulated banks, but corrupt banks and corrupt traditional financial intermediaries. And I'm not speaking about the US only here. Of course, the US has corrupt government officials and corrupt government regulated banks and corrupt financial intermediaries. They're constantly being sued and having to pay fines for this corruption that they are constantly doing. Everybody has this, and the US is probably one of the better ones. So if you think the US is bad, go to somewhere in the global south and then talk about their corruption in their government regulated banks and their corruption in their financial intermediaries. I'll just make a point here. Everyone thinks we keep the global south down. No. We provide them with the best currency to use to get loans, to expand credit, and they are the ones with the more corrupt systems. And then they'll say, oh, but that's because you're keeping them down, because blah, blah, blah. No, the IMF goes in there and says, we can't lend to you if you're so corrupt. You need to fix this stuff up. And then they say, oh, you're just trying to oppress us and exploit the global south. No, that's not what's happening. Okay. And adding it to a portfolio of stocks and bonds might provide some diversification benefit. But Bitcoin hardly qualifies as money. Now, why is that? You just say that out loud, but of course that's wrong. Bitcoin is money. It fits all the characteristics of money. When you talk about what is money, anything can be money. Salt has been used as money. Rocks have been used as money. Seashells have been used as money. Flint blades, like obsidian blades, have been used as money. Precious metals, of course. Paper. Cows. I mean, you can go on and on and on and on and on and on. Many things. Everything can be money. It's just what provides the functions of money and the best, and that would be dependent on its characteristics of that asset, the properties. So you have to have monetary properties that give it better moneyness. So some things have poor moneyness, like, for example, in prison, they might have cigarettes or money, right? Everything can be used as money, but it just matters what the moneyness is. So when he says that Bitcoin hardly qualifies as money, that is absolutely a stupid statement, Mr. Dudley. Bitcoin's moneyness is of very, very high quality. It's of the best quality for our coming era. And I have to put that in in brackets at the end of that sentence, because some things will be better money at different periods of time. Bitcoin is the best money for most periods of time, I would say, but not all periods of time, because gold has many of the same qualities as Bitcoin, but it was selected against by the market. Now, why? And I covered that on Wednesday's live stream. And I had a commenter on YouTube that was like, I came here to get bullish on Bitcoin, and you're talking about how Bitcoin is just like evolving money. It's not always the best money, and yada, yada, yada. Well, yeah, it's because that's what you get here on Bitcoin markets. You get like insightful commentary about monetary theory here. Anyway, let's continue. Its volatility makes it a poor medium of exchange. I mean, just listen to that sentence. So its volatility makes it a poor medium of exchange. So if you're talking about medium of exchange as a function of money, okay, volatility speaks to its store of value. Volatility does not speak to how easy it is to make a transaction. It's extremely good at transaction. I mean, if you talk about gold versus Bitcoin in transactions, it's much, much easier to use Bitcoin because it's highly, highly portable. It's highly, highly divisible. It's highly, highly recognizable. My Bitcoin app will not recognize counterfeit Bitcoin by definition. It's much easier to use it in exchange, but volatility does not speak to it as a medium of exchange. It speaks to it as a store of value. So look how messed up he is here. In these first two sentences, hardly qualifies as money. Of course it does. It has some of the best moneyness properties out there. Its volatility makes it a poor medium of exchange. No, its volatility, you could say, makes it a poor store of value, but then he has to contend with talking about the store value always goes up, right? It's volatility, but mostly to the upside. In most countries, people don't have to accept it as payment. Okay, so it's not legal tender. Okay, that's great. Transactions are slow and expensive. Compared to what? Compared to ACH wire? Compared to international wire, are Bitcoin transactions slow and expensive? Hell no, they're not. Wrong. Requiring significant computing power and energy to validate each one. Wrong. Wrong. It's trivial, okay? Computing power is not divided by the number of transactions, okay? Computing power goes towards everything, goes towards securing the market cap. It doesn't go towards an individual transaction. That's wrong. Because you can think of it this way. If a miner produces an empty block, they use the same amount of energy. I mean, no block is empty. There's always one transaction, and that transaction is the Coinbase transaction, which has the reward in it, but empty other than the Coinbase transaction. So a miner produces an empty block. They use the same amount of power. Or a miner produces a block that has, I don't know what the maximum amount of transactions, let's just say 10,000 transactions in it. It uses the exact same amount of energy. So those transactions really had caused no energy, or use no energy at all, period. It's absolutely, I mean, he doesn't know what he's talking about here. Moreover, if you lose that thumb drive, you've lost your Bitcoin. No, you could have multiple copies. You could have multi-sig, where you lose one key, you still have two others that you can sign with, or whatever the case. So yes, that is true, that if you do lose a thumb drive and that's your only copy and you don't know what your private key is, yes, they're gone. But it's not completely true. So nothing in this whole paragraph is true, like wholly true. This is on Bloomberg. This is what passes for content from a former president of the New York Fed on Bloomberg. And this paragraph is completely, utterly wrong. Okay. Unlike traditional financial assets, it's not connected to any cash flows, such as interest or dividends. Correct. But it is tied to appreciation. Higher prices don't bring forth greater supply. That's a good thing. The number of tokens is capped at 21 million, and nearly 20 million have already been created. That is true. As a result, greater demand can drive prices to extreme highs. Oh no, run away. Run away. It's like Peter Zion's argument on Joe Rogan. People won't buy it because it will never stop going up. Oh, run away, people. It's not a good investment because prices will go to extreme highs, limited only by the amount of real money people are willing to put in. That is wrong, though, because, for example, if I have a building and it is, the building is worth 10 million, I can decide what the price is in Bitcoin. Okay. So I can sell that $10 million building for 10 Bitcoins. That gives Bitcoin value. Whatever you're willing to sell to get Bitcoin, not just dollars, but goods and services. So it's not only limited by the amount of real money people are willing to put in. No, it's limited by the exchange value in the marketplace. And they're already starting to do it. They're already adding it to loans and everything. So that is not true. And that's like one of the arguments people make is like, so for Bitcoin to go up, it needs to have so much money coming in. That's not true, because Bitcoin's value can go up depending on its exchange value for all goods, not just dollars or not just yen or whatever. So that's not a true statement. As of yesterday, that was almost 2 trillion or 99,000 per Bitcoin. So here's an example. This 2 trillion, has there been $2 trillion of inflows? I would say no. I would say there's been a small fraction of that. 35 billion coming into the ETFs. And I would say before that, in the history of Bitcoin, maybe you would have another 100 billion, maybe 200. So at the peak, I would say at the upper end of the total amount of inflows that Bitcoin has ever seen is 250 billion. And it's valued at a market cap of 2 trillion. See? So it's not dependent. It's not limited by the real money that people put in. It's the market cap is dependent on what people are willing to trade for it. All right. It's thus easy to see why Bitcoin holders love the idea of government reserve. Of course we do. But so does the government. One bill already in Congress, for example, would require the government to purchase 1 million Bitcoin over 5 years. Okay, that's good. Then hold it for at least 20, along with Bitcoin already confiscated from criminal enterprises. If enacted, this would undoubtedly send the price soaring, of course, as investors piled in to get ahead of the government purchases, of course. Suppose, for example, the U.S. government imprimatur, I'm not sure what that word is, encouraged everyone to make Bitcoin a small part of their investment portfolio, say just 2%. The total value of global stocks and bonds is about 250 trillion. Well, if you add in real estate, it's a lot higher than that. So 2% would require all Bitcoin to be worth 5 trillion. So here he's doing the 1-to-1. And we've even talked about this in the past. It's the multiplier. So large banks have done this. Who did it? Which large bank did it? Was it JP Morgan? They had a report. One of the large banks had a report. Maybe it was Citi. This was back in 2021, I think. And it said, so for every dollar that comes in, what's the effect on the market cap? And at the really highly volatile times, it was over 100. So $1 coming in led to an increase in the market cap of 100x, $100. So this is not true either. The total value of global stocks at 250 trillion, 2% of that, Bitcoin would be worth 5 trillion. No, it would be worth a lot more than that. You need to do a multiplier on this. Maybe at the end of the next bear market, okay, it would settle at 5 trillion or something, because it would go to a higher equilibrium. But no, it would be much higher than this. If 2% of all assets came into Bitcoin, we would be at $1 million per Bitcoin, not 250. So double the portfolio allocation to 4%, the price would also need to double again. So this is simplistic. Is he writing this for a simplistic audience? No, I don't think so. I think he just doesn't know. I honestly think he hasn't really thought very deeply about this. What's in it, though, for the government or for people who don't hold Bitcoin? Nothing good. I wouldn't say nothing good. I would say nothing. Well, for the people that don't hold it, or the governments that don't hold it. But what's in it for the government? Lots of good stuff. The asset side of your balance sheet goes up. Like, for instance, let's say you have 40% gold backing the dollar, and the value of the dollar doubles, or sorry, the value of the gold doubles. It's kind of like 80% backing almost, right? Something like that. So if you have the value of your assets going up, I guess if it's pegged to the dollar, then it wouldn't be doing that. But if it wasn't pegged and you had 10 trillion in assets and the value of your assets go up to 8 trillion, you have more of a backing to your currency, which would give it more confidence and stuff like that. So that's good. That's good for the government. And if you're talking about a 10x in Bitcoin price and you want to buy $1 million, you're talking a substantial backing to the currency. There's no exit strategy. There doesn't need to be. The Neo and the Morpheus meme. So Neo says, so you're saying one day I could trade my Bitcoin in for $1 million? And Morpheus says, no, I'm saying one day you won't have to, because everyone will accept Bitcoin, right? So that's the exit strategy. So the purpose must be to push prices higher, okay? Not create value for the government. And that's only because of his assumptions. It has nothing to do with reality, which would be stuck holding volatile tokens that produce no income. Okay, but they go up, they appreciate. To fund the purchases, this is the bad part too. To fund the purchases, either the Treasury would have to borrow, driving up debt service costs, or the Federal Reserve would have to create money, fueling inflation. Wrong. So he's putting up a false dichotomy here. And this is definitely bad faith. He's doing this in bad faith. So either the Treasury would have to borrow or the Federal Reserve would have to print. That's his two options. There's two more options. Okay, there's two more options that he's not considering on purpose. The first option is to buy it with tax revenue. Oh my God. You tax the people and you buy Bitcoin. You're not borrowing and you're not printing. That's one option. And the other option is to sell the gold reserves, or to sell assets and convert them to Bitcoin. The latter would be little different than the Fed monetizing the US government debt. I do not know how he gets to this sentence, guys. If you can fill me in on how he connects the latter here of, oh wait, hold on. The latter would be little different than the Fed monetizing the debt. No. I don't know how he connects that to the money printing. But then also in the parentheses here, he says, and this would also be what it'd be like when you sell the gold reserves to buy Bitcoin. So how does he make this monetizing the debt? I do not understand this at all. It's very, very confused. So tell me in the comments how he's connecting that. If the Trump administration really wants to support the nascent crypto/Bitcoin, not crypto, Bitcoin industry, it should work on a set of laws and regulations under which it might safely develop and operate. And they will, and they are, and it's happening, okay? So they're doing that. Ensure, for example, that stablecoins, tokens that purport to be worth $1, they don't have to purport. They are worth $1. They are. Go out on the market and try to ask for $1.10 for your tether. You know, go try to buy tether for 90 cents. No, these are worth $1. They're not purported to be worth $1, bro. And they're fully backed by deposits at the Fed or short-dated Treasury securities, and they are mostly. They are fully backed, not necessarily completely by short-term Treasuries, and not at all by deposits at the Fed. And that's one thing I've actually recommended in years in the past, is to give stablecoins a green light and just say that they have to hold their stuff at the Fed. I don't see really a downside to that. Define legislatively whether tokens are currencies or securities. Well, no. Bitcoin is money, and the dollar is a currency that will be on top of Bitcoin, a denomination like gallons and gasoline. It'll be dollars to Bitcoin. And who regulates them? And a lot of people don't like this idea, but that's what's going to happen. The dollar has changed many times. On average, every 30 to 40 years. This particular period from 1971 to today just happens to be the longest period where it hasn't had a major overhaul, but it will have a major overhaul in the future, and most likely it will be one that involves Bitcoin. So yeah, they will define it legislatively that tokens are money. Okay. Set rules to protect consumers and to prohibit use of criminal activities such as terrorist financing and illicit drug sales. Okay, yada, yada, yada. Bitcoin technology has the potential to improve the financial system. For example, make it easier and less costly for people to trade financial assets. No, it doesn't. This is wrong. Because he's thinking of blockchain technology, all the things. Let's tokenization. That stuff is it's all bollocks. It's all rubbish, because what happens if you lose your token? What happens if a hacker comes in? Like what Cash Patel just got hacked, and all these networks in the US just got hacked. What if you get hacked and you lose your token to your financial asset? They're not going to say, "Oh, too bad. You should have had better security on your smartphone." No, they'll say, "Yeah, we'll fix that for you." Just like Tether does, right? Tether does the same thing. It's centralized. So it does not make it any easier or less costly to do this, in my opinion. The cash side of it would be, but not the actual, like the settlement of money would be easier and less costly, but not the settlement of the financial asset other than money. Okay. So, or for migrants to send money home to their families. That's true, but they can do it trivially today. They just set the fees really high. In the absence of strong guardrails, however, fraud and abuse will persist. Fraud and abuse in Bitcoin is like less than 1% of all settlement. There have been studies on this in the past. So I would say fraud. I did a calculation. I think I wrote a piece on this actually. Where fraud for total amount of dollars is higher as a percentage than fraud in Bitcoin. So they just don't know what they're talking about. Undermining the trust required to bring such benefits to fruition. And that's it. So let me check any comments. I'll scroll up to the top here. I archived this because this is on Bloomberg. Let me see what comments we have here. Dex Invictus back with us. What's up? Oh, it's 5:22 already. Been going a while here. Raphael says, wait until they find out that holding $1 billion worth of Bitcoin on a cold card is more secure than having it in a bank. Yep. By orders of magnitude more secure. Yeah, you're right. Dex. This article is a bunch of poppycock. Are you making fun of me saying bollocks and rubbish? Okay, let me check Telegram. No other comments, but let me just double check here. Okay, I'll check that out. Dave S says, how much Bitcoin is Sailor buying this weekend? I don't know, man. It's about 10,000 a week, right? Something like that. That'll take care of all the stuff that the U.S. government's, like, people think they're selling. I don't think the U.S. government's going to be selling that. Larry Jr. says, which bond yield is correlated to mortgage rates? The 10-year? The 10-year is highly correlated to mortgage rates. So as that dips, mortgages will dip. And just retouching on that, one thing that I've said in the past is that this recession could be deep but brief because of that reason. Because as the yields come down, mortgage rates come down, there's a lot of pent-up demand for mortgages and for refinancing and for all these other things. And what does that do? That releases money out into the economy, which could have a stimulatory effect in a private market sort of way, right? And so that could shorten the coming recession as yields crash and people refinance and all that stuff. So, all right. Let's go into a couple of, well, I don't want to listen to this one. This is from Michael Saylor. You guys can go onto his Twitter or his X here and find that. This was a good conversation. He didn't really say anything new. He just is refining his comments. Let's go to this post here, though, and pull up this chart. And it is by Bitcoin Teddy. So I don't know if Bitcoin Teddy watches the show here, but he says that 80% of all dollars were created in the last 5 years. Have a good night. So here, this is the image, and you can see up until 2020, there was M1 was at 4 trillion, and then all of a sudden it goes to 20 trillion. Now, guys, if you look at this chart and you think that this is actual money supply, I mean, doesn't this spike of 500%, 600%, whatever this is, and prices only increase by 30%? Shouldn't this tell you that this is not money? This is not a measurement of money. So the way I look at it is real money supply is something like M37. I don't know. It's money is evolving in the financial system, in the shadow banking system. And if they wanted to really track it, they would have had to change the definition of money many, many times. That's what they're trying to do with M1 into M2. Trying to track that esoteric forms of money. If we just count it a little different, we'll be able to match it up with what is going on with prices and X, Y, and Z. But that failed. So they said, okay, let's make M3. So they made M3. And they thought, okay, this is how we measure money, and this is going to fit all of our calculations and make it predictable. And it wasn't. So what they do, they said, we're just going to give up. We're just going to give up on counting the money supply. That's what happened. And they started targeting interest rates, because interest rates are like a window into the shadow banking system and real money supply. So M1 means nothing. If anything, it means this much money has been pulled out of the high-powered shadow banking system and down into M1. And that's not good, right? So that's what I would say about this chart. Let's go to this final one. Then I'll take a look at the comments and questions again. So this is about Romania's election. Romania has now annulled the first round of their elections through their court system, and they are going to have a new vote. Well, this is just a sign of the rise of populist conservatism going around the world, anti-globalism, anti-Marxism, and now they're overturning this. And what is going to happen? And I said this on Telegram. So there's like a marginal amount of voters like that could swap one way or the other. And when you annul a vote like this, is that margin going to be like, oh yeah, this is going to make me more likely to vote for these Marxists that are overturning elections and trying to censor my vote and all this? Or you can go the other way and say, these people have to get taken out. If we're ever going to have real elections again, we need to take these people out there trying to overturn all this stuff. And so the right-wing parties are just going to continue to get more and more popular. So that's exactly what happened in the United States with Trump. And it's going to happen here as well. It's going to happen in France with Le Pen, trying to jail Le Pen. It's going to happen in Germany, most likely, with trying to suppress the AfD. So all of these things, that is how I'm seeing all this stuff rising. And everything is going towards a deglobalization, a more isolationist, more nationalist, more conservative. And that fits into a monetary theory. So where we're coming from is a credit-based system. And what do you need for credit? You need trust. The borrower needs to trust, the creditor needs to trust the borrower. And the borrower needs to, when he invests his money in whatever he's doing, he needs to trust that his markets are not going to be affected by tariffs, or that his market's not going to be affected by some other regulations in another country. Okay. So for banking, or for a credit-based system to work, you need to have high levels of trust. Well, these elections are showing that they're going against this. We're going against globalization, against high levels of international trust, back towards a conservative, isolationist type thing, populist type system. And so what happens? That credit-based system doesn't work that well anymore. And slowly you're going to go back to commodity money that works because the trust is manifest or instantiated within the good itself, right? When I settle Bitcoin, I'm settling Bitcoin. I don't need to trust that guy anymore. When I settle gold, I don't need to worry about the trust. It's instantiated in the settlement. And when you have a credit-based system that nothing's ever really settling, it's just all kind of up in the air, you're going to go away from that towards real settlement. And so that's why we're going to go back towards commodity-based money. That's why this story right here about Romanian elections is just another chink in that armor of the credit-based system of international trust that's going to go back to a credit-based dollar, or to a sound money. Okay, let me check the comments here. While I'm doing that, go to the website. I'm almost done here, guys, wrapping up on a Friday. Bunch of malarkey texts. Bitcoin jumped on-chain fusion train by Definity is modern day miracle. Leroy, have no idea what that means. Not talk. Oh, I do have an altcoin slide to show you, or chart. Raphael, that Darth Maul candle was wild. Same thing happened when the price crossed 10,000. Yep. Psychological level. Liquidated longs, capitulated. And as you said, go higher after that. True. Let's take a look at the price. Is it moving at all? Share the price chart. It's coming down a little bit, 1,600, but again, very, very close to this pattern. I'm just so flabbergasted. There you go, Dex. I'm flabbergasted at this, the way the pattern is holding up. Very, very nice. There's almost no risk of a major sell-off at this point. It's just a matter of when we break higher. But yeah, that Darth Maul candle. So what he's talking about is, I have my Mew here. Darth Maul. I don't have it red, but actually, let's go to the hollow candles. So see this red candle here with the long wicks on each side? That's Darth Maul's sword in Star Wars. And that's a pretty nasty Darth Maul candle. But same thing happened, you say, when we passed 10,000, which let's go back to that. So we would have to go back further, one more further, right? I mean, this one passed 10,000 and then came down, but you're probably talking about this one right here. Yeah. So we went over 10,000 on this candle. right here, 10,000, back down, big wicks on both sides. That's actually a pretty bearish candle compared to the one we just had. But then we went right up after that. And this is the daily chart. So, yep, just like that. Okay. So, what else we got? Dex. Dex is laughing. All right. Let's see. Telegram. Larry Jr., say that the 10-year doesn't seem to follow the Fed funds target or the mortgage rates. Let me see. This will be the last thing of the day. Let's go back to the mortgage rates, and we'll bring in here this and this, and then we will make it regular. So it kind of does, but you can see like right here, this mortgage broke to new lows. The mortgage rates broke to new lows prior to the Fed cutting. So that would be like right here. We'd have to go down here. So see, it broke down to new lows before the Fed cut. And it kept going up too after the Fed stopped. And this is kind of upward sloping right here. See that? And it's kind of taking off really right here, breaking this level for mortgage rates. If we draw a straight line and zoom in, sorry for all these labels, make them white. Disregard those labels though. But breaking out right here, and it broke out before the Fed started raising. So if we go from this breakout, so the rates always follow they always lead the Fed. The Fed always follows on all of these things. So we'll see where this ends up. And we could also do this, like connect these highs and say this is a downward trend, and this downward trend led the Fed downward. But yeah, there you go. That's that. I can get rid of these now. The mortgage rates. Yeah, they're not following, they're leading. Okay, back to these comments. See if there's any others here. We have 290 people watching. What's up, guys? Happy Friday. Great stream. Thank you, sir. Okay, so that's where I'm going to leave it today. And guys, check out bitcoinandmarkets.com. Let me go back to the homepage. Free email list there. I've been producing content since 2016. Been writing more lately. I go in spurts, but I'm writing more lately. And this is where my newsletter comes out. That's weekly. And it's on the 300th issue, 316th issue. So I've been writing this newsletter for a long time. Never sold a scam. Kept you ahead of the curve in Bitcoin. Kept you ahead of the curve in macro. Developing my macro thesis here. I've made great predictions on the dollar, on China, on Bitcoin, of course, on oil, on all these things in the macro context, and building out a complete and a holistic way to understand global macro and why we're going the way we are, where we're headed, the path that we take to get to Bitcoin. What does that mean? That's the stuff we cover here on the show. So if you're watching, 290 people tuning in, probably over there on X, jump over to the YouTube and Rumble. Links are in my pinned tweet. Like, comment, subscribe over there. Appreciate that. All right. And that's going to be it for today. Guys, have a great weekend. Spend time with those you love. That's what's really important. Even with Bitcoin going up, Bitcoin go to 1 million, and it's not going to replace time with your kids. I saw, or I read some stat that said, like, by the time your kids are 12 years old, I think it was, that you spent 75% of the time with them that you ever will in your entire life, the rest of your life. So spend as much time as you can with those that you love every day, and do that on the weekend. Set an alarm or whatever, but don't worry about the price on the weekend. Make sure you're spending time with those people that are important to you. So, all right, guys, have a great weekend. I'll see you on the next one. Bye.